Does that mean go? Okay, I wanted to discuss a topic tonight that I've been festering over for the last year. We didn't successfully complete one deal this entire year of 2025. We did a lot of preemptive work and are about to close on 2 companies within the first quarter of 2026. But we also looked at probably more businesses than I can ever remember in a year, much more. And the reason that I make these videos is because at least half the time when I go to meet a business owner, one of the first things they say to me whenever I first meet them is, "Oh, hey, I looked you up." And I hopefully in doing this, they can start seeing the way I think, the way we buy, what it looks like after the sale, before the sale, during the sale, and kind of give them some preemptive information ahead of time. So the topic I wanted to talk about is basically the extreme overvaluation trend that's going on in the cost of companies for sale right now. It has crushed almost every thing that I looked at this year into either just, not even considering buying it. It's a people get these crazy numbers stuck in their head, and I'll get into what my theory on that is. But I just think there's a giant lack of understanding on true financials of their businesses, and actually, and more importantly, what a business can actually afford. What kind of extra costs can this company actually afford, right? There's no one company that could just absorb a bunch of new costs, whether that be new employees, new debt service, change of location, change of processes. I've seen how fragile companies can really be. I've seen how fragile companies really are, even though on the surface they look super strong. Their accounting may be tweaked in ways that make it look stronger than they are, But yeah, so like I said, I think when selling a company, when a business owner is selling a company, right? Most of the time, whenever they find a potential buyer, which these potential buyers, they're a niche in themselves. There's not a lot of us out there looking to buy companies because you know what? It's a risk. You're inheriting a headache, and it can be really troublesome financially, mentally, spiritually, physically. So the first thing I'd like to talk about that I don't think a lot of people, a lot of owners consider, a lot of buyers consider, and even the banks, I don't think they consider this all that much either, is debt service. And when I say debt service is, what is the cost of the money that you're being lent to buy this business, right? Most of the time when a founder is selling their business, they don't have a whole lot of debt, especially baby boomers. Not all of them, because I've seen a lot of guys riddled with debt, but a lot of the time these guys operate with little to no debt, which is great. It's absolutely great. But at the same time too, they see what they're making, they see what their margins are, and they automatically assume like, okay, somebody can get a loan for this business and they'll just ride it out like I did, right? But people don't look at debt schedules. They don't look at amortization schedules. They don't see how much that money is actually costing them. And I know, you're only putting your interest on your profit and loss statements, but at the same time too, the principal of that loan that you pay every month, it may not come up in your profit and loss statements, but it will come out in your cash flow, and you absolutely notice that right away. I know I do, and I know people that have got major loans. You know, it's like sometimes outside your labor and materials, it's your biggest expense. It really is. I know for our one company that we bought, we used an SBA loan, and yes, it is the the second biggest expense out of three. It's our labor's number one, our debt service is number two, highest cost that we have, and number three is our rents that we had to rent off the old owner to continue operating out of his business, or we're renting his buildings off him, which it is what it is. We had to do it. We need a place to operate out of, but it's crazy that the debt service is the second highest cost that we have in that company. Now, obviously, it's a short-term loan. I think we only have a few years left on it, but at the same time, too, man, it's painful. It really is painful, especially in the slower months like now in the winter. It totally fucking sucks, you know? And when I say debt service, I don't just automatically mean a banknote, right? I'm not, you know, it could also come in the form of a seller finance note, right? Like, what are you, if you enter a seller finance agreement with somebody, you know, what do those payments look like? What do they do to your cash flow? Because that's the most important thing to me is the company that we're buying stays healthy, stays liquid, and isn't choked out by the debt, you know, whether that be monthly or quarterly payment, or, you know, I've done 3 different seller finance deals where we paid one time annually to the owner, and you know, we've made the payments and everything, but I'll tell you what, those payments hurt. They really do, and it's nothing you can do about it. Second thing, cost-wise, doesn't always come from the employer, but the employees that you're inheriting, right? So what I've experienced is a company's being bought that we're buying, and because we're a larger conglomeration of companies, sometimes employees automatically think it's Christmas Day. You know, they're all right, now we're getting our raises. Now we're, you know what I mean? Like, no, like that's not the case. Like I've had employees of companies that we're going to buy call me before we even closed and inquired about raises. I mean, that's pretty, you know, I don't like those calls, right? Because I'm buying a company as it sits right now. I actually, you know what, there was a real piece of shit that we bought a company off of. It was a real snake in the grass. He seemed cool at first, but it turned out he was a real snake oil salesman. Luckily, his company's doing well now after we bought it. But one thing, he owed bonuses to a bunch of the employees that we were acquiring, of the business we were acquiring, right? So instead of him giving bonuses, you know what he did? He gave out of his pocket, instead of giving bonuses out of his pocket, what he told everybody was, I'm going to give you all a substantial raise before we close. Now, he didn't tell me that because based off our asset purchase agreement and letter of intent, he wasn't allowed to do that, but he did it anyways. I mean, I think he gave out like $120,000 annually of raises before we closed, like the week before we closed. It was crazy, right? And what am I supposed to do, right? I didn't find out for a month, right? And what am I supposed to do? Like, okay, I'm the new guy coming in to run this company. I'm the new owner, which I'm kind of, you know, you're kind of walking on eggshells as it is, because you're trying, you want to make sure everybody's still happy and still staying working and stays with you for years to come. And you just got a big fucking raise from your old boss, and then the new guy's going to come in and strip it from you? Like, how does that look? Even though I would legally be allowed to do that, how does that look? Looks terrible. So I had to suck it up, and start budgeting for it. It's totally sucks. But like I said, employee packages, you know what I mean? And that's not just with acquisitions. Certain companies in certain industries can only afford so much in employee packages, and that is not a shot at the employee. That's not a shot at their work ethic, anything. It's just, like I said, like this is the industry that they chose, right? You can't expect hedge fund manager returns when you're working at a residential painting company. It's just not it's not in the cards, right? And it's like, it's unfortunate, but a lot of the employees, they come to the managers, they come to the owners with their financial problems, and a lot of times they become your financial problems as the owner, right? Like as if, hey, I got another kid coming, or this and that, or my bills, inflation. It's like I hear this stuff and I'm like, was I sitting at your kitchen table doing family planning with you and your wife? Like, did all three of us discuss this? But no. But you know what? That's just something you kind of got to accept as a business owner. Like I said, I try to tell everybody the same thing. You have to know what industry you're in. You have to know what your, what you kind of would max out in your position. And you know what? If you're not content with that level of compensation, then that's on you to find a new way to make more. You know what I mean? Like Earl Nightingale always says, your level of compensation is always a direct equivalent to your service. So if you're only here, then your service is only here. So they're always equal. You're going to have to do some work to increase that. Maybe it's by doing something else. Maybe it's by getting into a whole nother industry, right? Just like I said, I was just watching a bunch of stuff on the news over the last couple months about the Starbucks and Amazon trying to unionize. Well, it's like, hey, if people want to join a union, that's great, and that's their right to do so. But at the same time, too, like, those companies weren't built for union packages for their employees, right? Just the same way as, like, hey, a lot of these companies that we're looking at to buy weren't built to carry debt service, and I'm honestly, and I'll admit, I go to Starbucks a lot, and I've been asking a lot of the baristas if they're union. I'm just curious if in my area they've unionized, and all of them said no. But if that's the case and it does happen, I'm wondering what the prices are going to increase to, because I can't see Charles Schultz just taking it on the chin and absorbing all that. But I could be wrong. But yeah, like I said, there's too much of an emotional factor when it comes into these pricing, right? And I don't blame a business owner whatsoever for trying to get the max money out of the sale of their company, right? However, if a business owner is completely one-sided on, hey, I want to make as much money as possible, that's my top priority, and much lower on the priority list is the longevity of the company, of the employees working there, of the health of the company, then typically I'll walk from the deal. If I can sense that, like, just out of the conversation, then God only knows what I'll see whenever I actually get into the actual management of the company. So like I said, I mean, and those guys are out there. They're probably more few and far between. Every business owner who has started a company always will say, I want to see this thing live on and this or that. But I'll tell you what, a lot of the time it comes down to the check at closing, which is unfortunate. Not always. There's a lot of guys who are pretty financially savvy and don't need the money, trying to take a strategic tax route about the way they're getting paid for the acquisition, right? So, but largely from what I've seen, it is it's a very emotional decision, right? You know, I put my blood, sweat, and tears into this company, this and that, and I know it's worth this much money. Well, I go back to the example of there's a fruit stand that I always go to in Duck, North Carolina, right on the side of the road, right on Duck Road, and they're out there every summer, right? And it's this Mexican couple, husband and wife, that are always working it, and they work hard, you know, and it's more of an organic, healthy, you know, you're not getting the same vegetables and fruit you're getting at this fruit stand you are at Food Line, right? So it's they're homegrown, non-GMO, all that stuff, right? And they sell it for a little bit higher price, obviously, and I'm sure people like myself, I'm like, oh God, that's pretty expensive, but I'll buy it. You know, it's kind of a vacation town, it's close, it's convenient, it's fresh, I'll pay for it, right? Now, what happens if that husband and wife grew those vegetables and fruit, right? And they said in their head, you know what? I put my blood, sweat, and tears into growing this watermelon, and to growing this muskmelon, and to growing these carrots. And I know everyone else is selling these things for $5 a piece, but I think they're worth $50 a piece because I put all my time and effort into it. They can do that, right? They can absolutely sell it for $50. But that doesn't mean anybody's going to buy it. That's the thing. Like, who's going to buy the watermelon for $50 a piece? And that's the kind of stuff that we're encountering a lot of, right? And I'm seeing it firsthand because people are calling me back after a year and a half, after 2 years. 2 people called me back this year. A year and a half ago, one guy's company was for sale for $6.3 million. And he is down to $1.5 million right now. Call it bullshit. I don't care. It is absolutely true. The other guy went from 4.8 down to 3 million. It all happened within the last month and a half. So I don't know if they had to go out and get some evidence of what they could actually get, or things are getting desperate in their lives, or whatever circumstances made them come down that substantial amount of money. It was eye-opening. But at the same time, too, they're still overvalued, which is crazy. You know, like I said, you could sell your company for whatever you want to sell it for, but that does not mean that myself or anybody else is going to buy it. And that's what I'm trying to get at, is because a business owner has to be realistic about what somebody, A, will buy it for, and B, what they can get financed for. Because let's face it, most of the people who are buying businesses are getting financing for those businesses. And listen, if anyone watching this has any experience with commercial lending, you'll know most of the time they will only lend 80%, and it has to be backed by collateral, typically by assets. And they like buildings, they like machinery, but you know what they're not going to collateralize is goodwill, because you can't. It's imaginary. It's a you know what I mean? It's a good name. They can't take that back off of you if you don't pay your note, right? So like I said, that's something that if a guy is selling his business, really needs to look at, like, what can I realistically get for this company? And more importantly, if I find a buyer, if I'm lucky enough to find a buyer that I want to sell my business to, what can that person realistically get his hands on? Because I'll tell you what, there is a small percentage of people who are actually out there buying businesses. There's an even smaller percentage of people that actually have the cash to buy everything up front. And you know what? If the people are savvy enough to have that cash, and they don't have to put it all up front and take a seller note, why wouldn't they? Right? So I don't know. I mean, you might find lightning in a bottle, and there are people out there that buy company, private equity will definitely pay out cash, but I have my own personal feelings on that, and I've talked to a lot of business owners that do not want to sell to private equity because of the things that that they get into and the changes that they typically make and their payment structure. But like I said, and then there's the tax factor. You know, like think about it. If you're selling your company, for us, the last thing that we look at that is the most important is your tax returns, like just your straight tax returns. What did you report for the last 5 years? What was it? Top and bottom line. Well, let's take a look, right? And like I've talked about this before too, you know, a lot of guys they'll try to evade paying taxes by showing losses, showing break evens, by not reporting cash. And I know I've met guys who take hundreds of thousands of dollars in cash and they won't report it. They'll put personal expenditures on and record them as costs on their business. They're evading taxes. They've done it for decades. And you know what? Hey, you've gotten away with it. That's great. But the problem is now you want top dollar for your company when on paper you don't have a top dollar company, right? So I guess you could think of it like this, like what you made over the years and not paying taxes is now being supplemented by a very low valuation. So I mean, and I've had to have these conversations with grown men and guys that are as old as my dad, and it's not always received very well, believe it or not. It's, you know, I'm the asshole, but you know, it's realistic. Something else too about these valuations, I think might be a factor is the I don't talk to too many business owners who are just working independently with what, you know, trying to sell their business. Like, hey, I heard that you bought so-and-so's business. I was seeing if you might be interested in mine, which has happened and to me many times, and a couple of them have actually closed. However, it's all, it's like everyone I deal with almost this year is like dealing with, they all have a broker. They all have a broker. The broker wants to be present in all discussions, and my theory is that like they make these, you know, most brokerages will make these packages, you know, these prospectuses on the company, and they'll twist things with all these add backs and everything to you know, to get that EBITDA multiplier way up. And here's the thing, that's all well and good, but they infest the mind of the business seller with a very high price, right? And I have seen this happen. They'll have this extremely out of line price that nobody buys, and it'll go so long that their contract with the broker will run out, right? And they'll still try to get somewhere around that price because psychologically they have that number in their head, right? And like then it becomes emotional because you know what? Once they have that number in their head, they start thinking about what they're going to do with it, thinking about, you know, how long it'll last them, and those are emotional thoughts, right? Instead of you know, rational thoughts, where it's like, hey, I know my business really isn't worth that much, and I didn't even think I could get that much for it. But this professional business broker is telling me that I can get this much, and blah blah blah. You know, it's really doing a disservice to an individual who is selling their business. And like I said, what happened? And here's a very important thing too. You know, all that time that they're trying to sell their business, which could take years, their mind isn't fully on the operations of the business. So what's happening to the company? What's happening to the processes and the employee culture and the pricing and the bottom line, in the increased revenues, or is everything flatline, or is everything heading downhill? You know, something that very well could happen and has happened. Like I said, it drives focus away from the operation of the business, in my opinion. Like I said, there's you know, a couple crazy examples that have come across our plate, so to speak, this year. Companies that we looked into. There was a commercial roofing company that we looked at. I think they wanted around $3 million for the sale of the company. And here's the thing. This is what's crazy. It was a couple owners, two owners. They had like 4 employees who were 65 and above, right? So kind of an aging workforce. And they, like I said, they sent us all their financials. And after taking like a hard look at these financials, we realized that there was 2 parts of the company. One was a stock option that they owned, and the entire rest of the company was the roofing company. And the roofing company itself was losing money, trailing, 5 years running, losing money, right? But the only thing that made this company profitable, and it wasn't even that profitable, I mean, maybe like I think it was like maybe best year was like $40,000, was the stock that they had that was performing for them. So I asked what this thing was, and they said, well, it's a stock that we bought back in 1982, and apparently it was an Apple stock, some amount of Apple stock, and it was really performing well for them over the years. And I said, okay, well, I mean, does that come, and I asked the broker, I said, does that come with the business? Is that why it's listed on here? And he's like, well, you know what, let me check. Number one, why is the broker even putting that on there? And why does he not know that that's what that is? Well, it turns out, yeah, the owners were like, no, we're keeping the stock. So, okay, I'm just going to buy a losing commercial roofing company with 10 rusty trucks and cranes and you know, no workforce. Like, where do you get the $3 million from? I don't. Okay. You know, the insurance brokers. We looked at an insurance brokerage to go with our insurance brokerage this year. We're going to bolt it on, and I was super excited about it because it was small. It was all personal lines, personal and auto, and they had a super clean income statement. All their financials were just lean, easy to read, easy to understand, less than a page long on the P&Ls. It was awesome, right? It was totally awesome. However, the guy wanted $1.3 million for it, right? They were consistently making $140,000 a year, right around there. You know, 120, 130, 140 for the last 5 years. It was very easy to predict, very conservative, right up my alley. All these things that are right up my alley, right? However, the guy says, the owner, he says, well, I want to do a minimum 1-year transition at $100,000 a year. So, all right, day one, I have a salary of the old owner for $100,000 for a year. And I said, okay, does that mean you're going to like run the day-to-day, this and that? And he's like, oh, no, this is for my transition and my consulting. And then also, his wife was the office manager who did all the clerical work of the whole company. Well, she was quitting. So now I gotta not only get a manager in there, I don't know, 100, 120K a year. I got to get another office manager in there, 70, 80K a year, and I got to pay this old owner $100,000 for at least 1 year. So I'm in the hole right out of the gate, and you want $1.2 million. Like, so, I mean, I guess that's the definition of eating your cake and eat it, or having your cake and eat it too, but I don't understand. Who would make that deal? I don't know. But that was another one with a broker, right? And the broker was negotiating all these terms with me, and I just, eventually enough's enough. I'm done talking about it. Same thing too, my buddy actually was looking at this neighborhood, this is just last week, he was looking at this, and he still is, he's looking at this neighborhood convenience store, right? And it's like half diner, it's super cool. It's like a little staple in the community there. Like people go there all the time for you know, sit down, breakfast stuff, bullshit like that. And the owner's selling it. But like, he wants he's there every day to day, doing, you know, making every decision. He is the ultimate manager and decision maker. His wife, she's there in the kitchen, blah, blah, blah. However, here's the thing, like, whenever they close, those two key factors are gone. Now he has to replace them. And the building is a must, has to go with the building, or the building has to go with the sale of the building has to go with the sale of the company. You know, and you know, it's kind of attractive. You could do a 504C with that. You only pay 10% down. However, even with 10% down, that debt service was eating that business alive, just eating it alive. And there's no way he could do the deal. There's just no way. And I think that, you know, this guy also had a broker, and they're in the prospectus of this broker, he is advertising for SBA, because all the brokers, that's what they want. They want the SBA. It's the easy go-to, the SBA. But those SBA loans, I mean, those are expensive loans. Yeah, you don't got to put a lot down, but I'll tell you what, you are paying for them, right? And just by looking at the financials that this broker produced for this little store, it shows that there's no way that it's going to be cash flow positive. He's going to be completely underwater day one. So, like I said, I don't know if those guys are just in it for themselves to make a quick commission, quick buck. But you know, if you're selling your company and you really do care about the longevity of it, you should care about how your buyer is paying for it, how he's going to manage it, and how much money he has to put into it to replace whatever management is leaving at closing. So, like I said, these are some of the frustrations that I've dealt with over the last year that you know, I don't want to say it made us not buy anything this year, but it postponed a couple things, but it 100% prevented us from buying things that were way too expensive. A good learning experience, but I thought it was important to, you know, kind of share some of this information if you're a business owner. You know, if you want to get paid, you have to think realistically how people can get that money to buy your company. Listen, does your company have any assets, right? Do you have any debt that needs to be paid off at closing? You know, how much money are you showing your bottom lining every year for the last 5 years, right? In comparison to what your top line revenue is. These are all things that are going to contribute to your asking price, and probably what a bank, if the person is financed, the buyer is financing it, you know, what the bank is going to value it at, because the bank will always use third-party valuation companies, and you know what, they're pretty clear about the metrics that they look at. So, like I said, that's about everything I wanted to piss and moan about. But you know, these are really important things for you if you are trying to sell your company. So that's all I have tonight.